Experts have been expecting that tax refunds will be higher this year than they were last year. Halfway through tax season, what's the data say? And what does it reveal about what you should be doing with your tax planning? I've got that and more coming up. How do you define success when you're filing your taxes? Most people define success as, I want to get a very big refund. And I would argue from a tax planning perspective, yeah, that can feel good, and it might be indicative that you've done some fantastic tax planning. However, oftentimes a really big refund tends to mean you missed a tax planning opportunity. Well, the data is in. Experts have been expecting that refunds are going to be higher this year as opposed to, so your 2025 taxes that you're preparing in the spring of 2026, they expected that refunds are going to be higher this year than they were last year. We've been expecting that and have been preparing you for it and been telling you what you should be doing. The data halfway through tax season is revealing just that. Actually, a bigger refund jump than I even expected. The average tax refund, as of right now, this is likely going to change. More complicated returns are prepared later in tax season, so this is likely to change, but $3,800. That's a 10% increase over last year at this time, and yeah, pretty incredible. That's much higher than what I expected. Now, more complicated tax returns, they're filed later into tax season, closer to the deadline, and so on average, typically the tax refund, I think last year was closer to $3,000 on average. So we'll see where it lands, but why the increase in tax refunds thus far this year? And is it indicative of a problem or missed opportunity? Well, the primary reason I've been sharing this, is that the tax laws, many of them changed. We got the OBBBA passed in the summer of last year, and yet withholdings didn't change. And these tax laws introduced a lot of new deductions and made a couple other changes. Namely, if you've got young kids, the child tax credit went from $2,000 to $2,200. And if you look at that average refund right now at $3,800, that's a 10% increase. Therefore, that's a $380 increase. Well, if you have a child at home, a young child, it's $200 of that increase just came from the child tax credit. So that's a big deal. The standard deduction, that increase, this sort of flew under the radar, but through the new tax laws, we got an extra year of inflation increase in the standard deduction. It was at the beginning of the year was supposed to be $15,000 for single individuals. It actually was $15,750. And at the beginning of the year for married filing jointly, it was going to be $30,000. What actually the standard deduction actually was for married filing jointly, $31,500. So a slight increase in standard deduction. Speaking of the opposite, itemized deductions, we are seeing more people itemize their taxes, and it's because the state and local tax cap that was $10,000. So if you pay a lot of property taxes or state taxes, you weren't able to deduct all of it. It was capped at $10,000. Well, they moved that cap. If your income's below $500,000, they moved that cap up to $40,000. We are seeing, it's not impacting a ton of people, but it's impacting some. We've prepared probably 1,500 tax returns so far, and more people are itemizing. And when you've got that bigger deduction, withholdings never change, yeah, that's going to lead to a higher refund. And then, of course, the trifecta, the no tax on tips, no tax on overtimes, which is not what happened, right? And then the new senior deduction. While each of those deductions is a little frustrating in its own right, it is creating a deduction, right, for those people that qualify. And yeah, a new deduction reduces your taxable income, then you potentially have a bigger refund if you kept your withholdings the same. But here's the problem. You know that if you're getting a refund, it essentially is meant that you've paid in, you've withheld more taxes than you otherwise needed to, and you're just getting that money back, your own money back from the IRS. And so when you frame it that way, yeah, that's where maybe it isn't such a good thing to expect a bigger and bigger refund. It's just a short-term loan to the IRS. And while that is problematic, sure, to me the bigger problem is with these bigger refunds is it's likely indicative of a missed opportunity. When you look at these reasons for why refunds were a little bit bigger, these deductions that were created, many of them are temporary. Therefore, if you were eligible for some of these new deductions and said, okay, yeah, great, I was a little bit in the 22% tax bracket or maybe right at the top of the 12, and I got these deductions, and so now my income's lower, I got a bigger refund, that's fantastic. No. I want you to pay the least amount of tax over your lifetime, if not multiple lifetimes. And sometimes that means paying the most tax at the lowest possible brackets. Therefore, if you were in the 22% tax bracket, and now because of some of these deductions, you're well within the 12% tax bracket, should you have done a Roth conversion? Should you have shifted your pre-tax contributions to Roth? Should you have harvested some capital gains, done something else to soak up some of these new tax deductions? And yeah, that maybe would have led to a slightly smaller refund than a bigger one than you currently got. However, when you look at the amount of tax you'd pay next year or in the future, it would have reduced that because you pulled some income into this year to offset some of these deductions. If the SALT cap has really meant that, well, you would have itemized, but you've been getting the standard deduction, and now because that cap lifted from 10 grand to 40 grand, all of a sudden it means you itemize. Does that mean you should have done some Roth conversion? Does that mean you should have shifted your contributions from pre-tax to Roth? Here's the thing. If you're doing tax planning, you are shifting the conversation from being reactive with your taxes to being proactive. And not just proactive for this year, but doing a multi-year tax projection and tax analysis. For most people, getting their taxes done is just a obligation. I've got to check that box and then, oh, I hope I got a bigger refund. I did. That's fantastic. Everything must have been great. That's all reactive. Shifting and being proactive to look and say, well, what opportunities exist for you to pay the least amount of tax over your lifetime? And that is certainly optimizing and increasing your deductions. And yet it might also mean exploring, well, what income are you going to have to pay tax on out there in the future? Do you have an opportunity? Would it make sense to pull some of that income from future years into today so that you can avoid tax on those dollars out there in the future? That is precisely how you optimize your tax picture and pay the least amount of tax over your lifetime, if not multiple lifetimes. And that's the planning work that I want for you. That's the experience that I want for you because I've seen it. I've seen it how more wealth gets built in your name, right? For you and your family, and less of it slips through your fingers and goes to Uncle Sam. So you've got to be looking at all 6 areas of your financial life. And then within tax planning, which is one of the areas, this is the 3rd area, then working with your CFP and using that multi-year tax projection, you're able to analyze, well, what opportunities exist for you to pay less tax maybe this year or out there in the future, and then determining which of those strategies make sense based on your unique financial situation and the rest of your financial life, where you know, yep, this is one that we should implement, or no, that's a good idea. It's not right for me right now or this year, and we'll explore that in the future. That's the tax planning work that I want for you. So work with your certified financial planner on that. If you don't have a CFP on your team, contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.